All right, good afternoon, everyone. My name is Lori Haupt, and I'm welcoming you all to this afternoon to our basic sales tax seminar. I'll be hovering in the background here to assist our fabulous speakers, Marla and Denise, today. Um, at this point in time, I have muted participants, but if you have questions going forward, please feel free to ask them. Feel free to put questions into the chat. Denise is going to be watching that as we go along through the presentation. We are going to be recording today's presentation, so if you want to go back and refer to it, you can. We'll have it uploaded onto our YouTube page in the next couple of days or so. And I do send that link out to all of the participants. Just a second here. Um, and at this point, I'm going to hand it over to Marla and Denise to introduce themselves and take it away.
Thank you, Lori. Welcome, everybody, and thanks for joining us today for the Basic Sales Tax Seminar. My name is Marla Schmidt, and I am located in the Yankton office. I'm a revenue agent with the Business Tax Division, and so I will be presenting the information today, and Denise will be assisting with questions, so I will let Denise introduce herself.
Hello, everyone. My name is Denise, and I am located in the Watertown area. I do recognize a few names on that list that have taken this class before. I will be monitoring chat, and what I will do is I will go ahead and read the question that you have put in chat, and then we will answer it for everyone to hear, because a lot of people do benefit from other people's questions. But Marla will be doing the presentation, so I will hand it back to her.
All right, great, thank you. So let's get started. This presentation today and the materials that accompany it do not constitute written advice to any specific taxpayer under SDCL 10-59-27. So who needs a sales tax license? Any person who sells, rents, or leases any kind of tangible personal property, you may hear us refer to it as TPP, or transfers products electronically. Anyone that sells any kind of service or engages in any realty improvement contracts, anyone that purchases products or services that may be subject to use tax, or anyone that has a business with a physical presence or nexus is how we refer to that in the state of South Dakota. If you own more than one business if you have more than one business location in South Dakota, we do recommend you complete an application for each location, and then we can consolidate the licenses so that you can do one filing for those multiple locations. In order to do that consolidation, the businesses must have the same ownership type, like a sole proprietorship or an LLC. Both have to be under that legal ownership, and the same type of license, like a sales tax license or the contractor's excise tax license, and then the same EIN number for both locations, and the SIC code, which is our standard industrial classification code. And in South Dakota, there is no minimum threshold that applies when there is physical nexus. So it doesn't matter if the business would bring in revenue in the amount of $5 or $50,000. If you are doing any type of these services or selling these types of products, you would be required to have a license. Whoop, went too far. What is nexus? Specifically in the world of sales tax, nexus refers to the connection a seller has with a state. It is a legal connection that empowers a state to demand collection and remittance of retail sales tax. Nexus can be established either physically or economically. Physical nexus is created if a business does any one or more of these in South Dakota: has a business location, whether it's permanent or temporary, has a salesman, a representative, truckers, peddlers, or canvassers, whether they're a resident or a non-resident of the state. They make deliveries with its own vehicles. If it installs or repairs products, it has contracts for construction services, or if it uses a carrier which provides services in addition to delivery, such as setup or installation. Economic nexus is a threshold established by a state, and it can be a dollar amount or a transaction amount, like a number of transactions. When a business meets a state's threshold, the business must register, collect, and remit tax in that state. If you have economic nexus, you do not have to have physical presence in South Dakota, and the seller's gross revenue from the sale of tangible personal property, any product transferred electronically, or services delivered into South Dakota exceeds $100,000. These are the different types of licenses. There's a sales tax license, and that's for businesses that sell, rent, or lease any kind of tangible personal property, or TPP, products transferred electronically, or provide any kind of service. A contractor's excise tax license is for businesses that provide realty improvements or construction services. A manufacturer's license would be a business that fabricates or manufactures items which are sold to other companies for resale, and they have a manufacturing facility in South Dakota. A use tax license would be for businesses that purchase TPP, products transferred electronically, or services on which South Dakota sales tax was not paid. And a wholesale license is for businesses that sell all products to other businesses for resale. With a contractor's excise tax license, sometimes you'll find a business, and I'll just use like an excavation company, for example. They sometimes will operate in the summer months and do the excavation work in the winter months to keep busy because of the weather in our area. They may do snow removal services. In that instance, they would not have to have both a sales tax and a contractor's excise tax license. They would be able to report their services for the snow removal on that contractor's excise tax license and report the city and state sales tax on that contractor's excise tax license. So they would only be required to have the one license. The manufacturer licenses will only be issued if they do not sell retail. If they sell retail, generally a sales tax license would be issued most of the time. And use tax licenses, some examples of that would be like a doctor's office or a dentist's office. Generally, those services are exempt from tax. Another one would be relief agencies. However, they may be using items where sales tax has not been paid on them, so they would need to report use tax on that license. And then wholesale licenses, again, will only be issued if there are no retail sales made. Our sales tax rate at this point is set at 4.2%. That tax rate changed on July 1 of 2023. Previous to that, it was 4.5. And sales tax applies to the gross receipts of the retail sale, lease, or rental of tangible personal products, products transferred electronically, or any types of services. Services could be lawn mowing services, Again, snow removal services, consulting services, those types of things. Construction services are subject to contractors' excise tax, not sales tax. Gross receipts is a term that we use, and it refers to the total amount of money or other consideration received for products or services sold, leased, or rented. And that includes taxable and non-taxable sales, special jurisdiction sales, barters, delivery charges, shipping and handling or crating, reimbursable expenses, except for those with accountants and attorneys. Those are handled a little bit differently for those types of industries. And also lottery receipts. Those are all considered to be gross receipts. Gross receipts do not include credit allowed for products taken in trade, fees or other interest for late charges on overdue accounts, no account or insufficient funds checks, sale price of property returned by customers if the full sale price is refunded in cash or by credit, and discounts not reimbursed by a third party. Trade-in as part of a payment of a taxable sale when the product is taken in trade is subject to tax. And then discounts may include cash discounts, early payment discounts, or store coupons. Items not included in gross receipts when separately stated on the invoice or documentation is provided to the purchaser would be any taxes legally imposed directly on the consumer, and sales tax is not included if itemized or documentation shows tax is included in the sales price. Interest, financing, and carrying charges from credit extended on the sale of products or services, and any fees or other interest imposed for late charges on overdue accounts, no account, or insufficient funds checks. The invoice has to have sales tax listed or say sales tax is included. A tax legally imposed directly on a consumer, if the imposition statute specifies the tax is imposed on the consumer, the seller is required to collect from or bill the customer for the tax, and the tax is to be paid by or is due by the consumer. Some examples of taxes that would legally be imposed directly on the consumer could be a federal telecommunications excise tax. It's a 3% tax that's mandated by the federal government and imposed on all telecommunication services, including local, long distance, and wireless bills. That tax is paid by the person paying for the service. Another example.
Marla,
Yes.
we do have a question.
Okay.
A question can you clarify the sales tax included and how would we show that we have collected that? Basically, Jason, that is your choice to do for a sales tax. In most cases, if you're selling a sales taxable item, you're going to show the tax, you know, it's going to be the total, and then you're going to show the actual percentage of the tax. When you can use the sales tax included portion is pretty much with contractors excise tax, and it would be just say tax included, all taxes included. You would want to keep a breakdown for your own use for that. But in most cases, if you have a sales taxable, you're selling something or you're providing a service that's subject to sales tax, you're going to want to include the tax percentage in there. Because if you're ever audited or reviewed and they pull that invoice up and they don't see it on there, they're going to assess you the tax. So you want to make sure that's shown somehow.
for just a second?
Yep.
I was also going to say it's very common in the bar industry where you would like to charge just a flat rate for drinks or beverages of that nature. So that's somewhere where we commonly see it too.
And Jason, yes, art shows, craft fairs, vendor fairs, anything with, you're selling something at a vendor fair, you're going to just charge $10 for the item. Tax is included in that, and you can back it out when you go file your return.
All right. So we'll continue on here. We were talking about examples of taxes legally imposed. A second tax would be on indoor tanning services. There's an excise tax that is due on that service specifically, and that tax is paid by the individual on whom the service is performed. Looks like there's a couple more questions there, Denise.
Yep. We sometimes receive invoices when the invoice uses one line for sales tax and the excise tax. Is that okay? That's something I would like to address. Are you going to be, Susan, are you going to be at the contractor's excise tax seminar on Thursday? Because if you are, we will address that. There are some stipulations on that. Okay. A contractor can line item the different taxes because a contractor is subject to excise tax and they're subject to it on both labor and materials. So they can have two different line items for that. Okay, then Tina has a question. Lottery receipts being included in gross receipts. Do you mean we show any money we receive for lottery tickets, even though that money is sent to the state? We would report this on our sales tax return, or is this referring to the commission received from the state that's reported on our income tax return? Well, first of all, we're not talking about income tax at all here. We're doing sales tax, and lottery receipts are deducted out of the gross receipts, which she talked about earlier. So they are not subject to sales tax.
The lottery receipts are generally included, should be included with your gross
In the
receipts.
gross, and then deducted.
And then, then deducted out on line 3 as non-taxable.
And yes, Susan says, but they add them together for one amount. Yes, Susan, they do. And the contractor will owe excise tax on the total receipts. That's why they do that. So they are doing it correctly. Okay, then Elijah says, does use tax apply to brokerage introductory fees? Specifically for introductory fees for the sale of a South Dakota business with the introducer being located in another state. Okay, I've been here 26 years and I would have to research that. So I would suggest that you send us an email with that question specific and be very specific on it, and we can find the answer for that. And then Tina says, sorry, I was a few minutes late. Okay, line 3, non-taxable, got it, thanks. And she's talking about the lottery receipts. Okay, go ahead.
Okay, we'll continue on here. When we're talking about gross receipts, the one thing we do not deduct items from gross receipts, and these are the things that would not be deductible. Retailers' costs of the product or service sold, the retailer's expenses, such as the cost of materials, labor, interest, losses, transportation to the realtor or to the retailer, or taxes imposed on the retailer, or charges by the retailer for services necessary to complete the sale, including delivery charges. Those things are not deducted from the gross receipts. The delivery charges Delivery charges include transportation, shipping, postage, handling, crating, and packaging. And delivery charges are subject to state sales tax and applicable municipal tax when delivered to a customer in South Dakota. If a product is not taxable, the delivery and handling charges are not taxable.
Okay, we have another question. We're a construction material lab located in Iowa. If we have a contractor doing construction services in South Dakota and we are doing the testing, do I need to clarify on my invoice that I am charging excise tax, not sales tax, correct? So you are doing testing services for the contractor? Depending on the type of testing services, that may be subject to sales tax and not excise. This is going to be a sales tax seminar that we're doing right now. And like I said, we're having another one on Thursday for excise tax. So Kathleen, are you going to be in that one? I would suggest you bring this question back up to us at that point, if you are. Thank you.
Okay. So with delivery charges, if both taxable and non-taxable products are in the same shipment, tax is due on the portion of the delivery charge for the taxable products. You can determine the taxable portion by using a percentage of the sales price or a weight of the taxable property compared to the total sales or total weight of all property in the shipment. We do have an example that we would use. Jones Furniture sells and delivers the following items to Fred's Furniture in Pierre. 2 sofas that are for resale for the total amount of $1,000, and 1 office desk for use by the owner, which also is in the sum of $1,000. Jones bills Fred's Furniture, $2,000 plus $200 delivery fee. Fred's gave Jones an exemption certificate for the 2 sofas.
Okay, we have a couple more. Stephanie says, can you clarify the difference of trucking company charging for services is not taxable like cattle hauling? Sorry, corrected that. Transportation services in South Dakota is not subject to sales tax. Shipping and handling and freight charges are taxable only if the product that you are shipping and handling or shipping to something would be taxable. And just an example, Walmart may have a bunch of product being shipped from point A to point B, and it is for resale. So there won't be any shipping and handling fees. Those shipping and handling fees will not be taxable. But if the item that's being shipped is a taxable item, then the freight is also taxable. That might have answered both those questions wrapped into one.
Jason also did have a question here. Shipping and handling fees are not taxable. I ship a photo. Do I apply taxes on the shipping and handling fee as well? It is taxable. Shipping and handling is taxable. So you would charge tax on the shipping and handling fee.
And then, yeah, that's what I included that in there. That shipping handling is based on the product. And she's got a slide coming up that says that too. The freight taxable is, no, but the freight company does not charge tax. No, on hauling of cattle, that would not be subject to tax. Because it's a cattle hauler. Okay, is mileage taxable if invoiced to a client? She'll be getting into that. That is called reimbursable expenses. And yes, in South Dakota it is.
Okay, so we'll keep on going here. We're talking about barters. Barter is an exchange of a product or a service for another product or service. And the value of the product or service received is subject to state sales tax plus applicable municipal tax. So we do have a couple of examples here. Tickets to a concert are exchanged for radio ads. The ticket seller owes sales tax on the value of the service received in exchange for the tickets. The radio station does not owe sales tax on the value of the tickets because placing of ads on the radio is exempt. And a second example would be a car repair shop repairs a bumper in exchange for lawn care services. The car repair shop owes sales tax on the value of the lawn care services. In addition, the lawn care service owes sales tax on the value of the bumper repair. Then we go on to return merchandise. You can receive credit for returned items, and they may be deducted on the current return if the items were taxed and the tax was also refunded. You would report these credits for returned items on line 3 in the non-taxable sales. If the merchandise is reported in a reporting period, if the merchandise is reported in one reporting period and returned in the next reporting period, you can enter the credit on the non-taxable sales line on the return during the reporting period that the item is actually returned. So basically, say in your March return, you reported the sale. In April, they returned the item and you refunded the tax. You can include that credit on the non-taxable line in April. So discounts and coupons. A store coupon, the retailer is not reimbursed for a store coupon. So the discount is not subject to sales tax. The store will deduct the coupon price before the tax applies. So you can see in this example here, the paper towels cost $3.50. The coupon applied deducted 50 cents. So the subtotal is $3. We apply the state sales tax at 4.2 and the municipal sales tax at 2%. So the total cost is $3.19. A municipal tax is city tax, the tax that cities may impose on municipal sales, and use tax of up to 2%. Municipal tax applies to all products and services subject to state sales tax or use tax. And the municipal tax applies when a product or a service is used, stored, or consumed within a city that imposes a tax. Additional tax may be due if a product or service is used, stored, or consumed in a different city that imposes a higher rate of tax than was previously paid. We have a municipal tax guide that we have available on our website. And then we also have spreadsheets and templates that we can upload into the ePath programs where you do your online filing. And then we also have a sales tax lookup tool on our website that does help you determine whether or not that city tax would be due. Exceptions to municipal tax would be on passenger transportation. It is subject to municipal tax only if the trip begins and ends in the same city. Farm machinery and irrigation equipment for exclusive agricultural use is subject to state tax only. no municipal tax. And receipts from amusement devices are subject to state tax and no municipal tax. This would be like pinball machines and coin-operated pool tables. Farm machinery sellers should actually have an exemption certificate completed to show that the item is exclusively for agricultural use. And they should obtain, anyone that is using the amusement devices should obtain amusement device stickers from our special taxes division for those amusement machines. Municipal gross receipts, that is an additional tax that some cities may impose. It's an additional 1% municipal gross receipts tax on any and all of the following. Some of us shorten it up and refer to it as MGRT, but it applies to alcoholic beverages, eating establishments, lodging, and ticket sales or admissions to places of amusement, athletic, and cultural events. And it can be imposed on one or a combination of all of these items. In our municipal tax guide, it does also specify whether a specific city requires that additional tax. Something new here that was just approved here that does become effective July 1 of this year is a capital improvement municipal gross receipts tax, referred to as CAPS. This was approved by House Bill 1245 and it becomes effective July 1 of 2026. It allows cities to impose an additional temporary gross receipts tax of up to 1%. And it also applies to all sales and products and services that are subject to the state sales tax or use tax if the purchaser receives or uses the product or service in a municipality that imposes a sales tax or use tax. Changes can only take effect on January 1st and July 1st, following a 90-day notification period to the Department of Revenue. The tax is temporary, ending at the earlier of 60 months or when a specific amount of tax is collected. And before the adoption of this tax, a city must establish a capital improvement board, which it consists of 1 official and 4 residents that will approve the ordinance. And then it must then pass by at least a 60% vote of the municipality. Our department anticipates a new city tax code to be implemented, and it will be reported in the city section on your return, just like city tax and MGRT is reported. And the department does also anticipate that we will not see this tax on returns until probably January of 2027. Another new tax that was approved here this last session was a new county option gross receipts tax. It was approved by Senate Bill 96, and it too will be effective July 1st of this year. It allows counties to impose a county option gross receipts tax of up to 0.5%. And it applies to all sales of products and services that are subject to state sales tax or use tax if the purchaser receives or uses the product or service in a municipality that imposes a sales and use tax. Changes can only take effect on January 1 or July 1, again, following a 90-day notification period to the Department of Revenue. Revenue must be deposited into a county property tax reduction fund to directly reduce owner-occupied property taxes through a credit. And the tax can be implemented by a vote of the county commission and it is subject to local referendum or initiation by the voters. With this tax as well, our department does anticipate another new code to be implemented, and it would be again reported in that same section where the general city tax and MGRT tax is reported. And again, our department does anticipate not seeing this tax on returns until most likely January of 2027.
And we have a few questions.
Yes.
Would that be listed separately on an invoice? And I assume you mean by the caps or the county, the city or the county. Yes, you could list it separately. We haven't really gotten that far yet, but it definitely could be listed separately, or it could be the one could be combined with all the city taxes, and the county, the county and the city could be combined into all the taxes, because a lot of times when you sell something, you're going to have the tax rate right now at 6.2%. You're not going to break down the county and the city, so you could combine it similar to how it's done now. And then another question says, on the caps tax, it says, if purchaser uses the products or services. So if someone comes in from out of the municipality, they won't have to pay that tax? Yes, if they purchase it in that city that the tax applies, or county, whatever, then they would need to pay that if they're picking a product up. It's similar to how our taxes are run now. If things are shipped out of state, then it would not be subject to that tax. But if the person is purchasing it within the city limits, then they would need to pay that tax. And Susan just clarified her last question, which we understood.
Okay. So the next slide we go on to, as far as reporting the municipal tax, we do that in the city and special jurisdiction section on the state sales tax return using the codes designated for that city and tax. In this example, you see gross sales was 10,000, use tax was $1,000, so we totaled that for 11,000. Municipal tax, the 2% applies to the total 11,000, and the 10,000 applies to the municipal gross receipts tax. Do not combine the taxes or report all tax under one code. List each tax separately using the designated code for that tax. The reason for the codes is the municipal tax and the municipal gross receipts tax can only be used for certain things by the cities per South Dakota law. And use tax is only subject to the general rate for purchases of supplies, equipment, and employee meals. Municipal gross receipts tax includes alcoholic beverage and prepared meals, etc. It does not include use tax and general merchandise sales.
Now, with those two brand new taxes that are coming, use tax will apply to the caps tax and to the county option tax. And we anticipate, in that example Marla was just showing, imagine there was another line below, one for cap tax and one for county option, if those jurisdictions elect to have both of those things.
Okay.
And then we got a lottery question. Are the proceeds from the South Dakota lottery reported in gross receipts in full, or just the 50%? Then that amount reported on line 3 as non-taxable. I assume it's 100% of it is put in there, because because then you're deducting it out in the non-taxable portion. And then how do you know when to use municipal tax? Jennifer, do you mean how do you know when to bill it? Keep in mind, municipal tax is due on anything, any sales or services that are purchased or performed within a city limits that has a city tax.
So, so I would be paying, so I should be charging my customer 4.2 plus 2% plus the 1%
What are you selling?
services, manufacturing, welding services.
Okay, your services would be subject to the state and the city tax. If that city's is 2%, the state tax right now is 4.2, and then the city would be 2%, so it'd be 6.2. The municipal gross receipts tax is for prepared food, lodging, that type of thing, not the services that you're providing.
Okay, perfect. Thank you.
You're welcome.
Okay, so we'll go on to tourism tax. Tourism tax in South Dakota is 1.5%, and it does apply to gross receipts received for hotel and place of lodging stays, campgrounds, motor vehicle rentals, recreational services, spectator events, visitor attractions, and visitor intensive businesses, where 50% or more of the total annual gross receipts is from the sale of TPP during the months of June, July, August, and September. For listings of the specific products and services subject to tourism tax, we do have the tax fact publication out available on our website. And that breaks it down into the different categories and has a really nice breakdown or matrix on the back of that publication. Tourism tax doesn't apply to restaurants in hotels or campgrounds. So the example shown here shows how to report the tourism tax. You would include it again and report it in the city and special jurisdiction section on the sales tax return, and you use code 700-1. In this instance, the city of Sioux Falls actually applies an additional lodging tax, and they use that code of 800-1. So anyone else, normally you would see it with the city tax, the municipal gross receipts for lodging, and then tourism tax, the 700.1. Earlier, we were talking about one of the tools we have, the sales tax rate lookup. We used to have what we called tax match, and now we've been using this tool here. This will help you find the local city tax rates, and you can plug the address into the find address or place line there and do a search. And then down below, it will show you which taxes are due. Clicking on the online services and then the sales tax rate lookup tool is on our homepage on our website. And you can also use our municipal tax bulletin that is available on our website as well. And these slides will be available later for you to go back and reference if you need to. Changes in the municipal taxes are posted on the department's website. The changes are generally effective on January 1 or July 1st of each year. Applying the sales tax rates based upon the zip code alone generally does not work. Zip code boundaries can cross over the municipal boundaries, the limits for those boundaries. So an address may not be within the municipal boundary that is associated with a particular zip code. Therefore, sales made to that address are not subject to the city or municipal tax. If you ever have a question, go ahead.
Yeah. Go ahead. You finish.
I was just going to say too, they could always call if they ever have a question. They could always call in if they're not feeling like they've got accurate information.
Well, we've got another question regarding the tax rate changes. Hi, Sean. If the invoice covers a service period that begins prior to January 1st and ends after January 1st, should the applicable tax rate be the old rate or the new rate? Lori, I'm giving that to you.
What's your accounting method? Because if you're cash accounting, it's going to be on whenever you get the money in hand. And if you are accrual counting, it's going to be based on when you do that invoicing. So if you don't send the invoice till after January 1st, use the new rate on an accrual basis one. With construction projects with materials, they are allowed to continue to use the tax rate that was in the original contract until that contract is complete. And we will have more guidance coming out on that. I apologize for not having it right in front of me right now, but that's what I can remember off the top of my head.
You did better than I did.
Okay, I had just a couple additional notes on this information here on the screen now. This tool will always show the general tax rate. It will not reflect municipal gross receipts tax or tourism tax. So you would want to make sure, you know, whether or not your industry requires those two taxes. And there would be a statement on the bottom of the page saying if municipal gross receipts tax applies, but it would not make a statement about special taxes such as tourism tax or motor vehicle tax. Again, the municipal gross receipts tax would apply to admissions or ticket sales, prepared food, lodging, and alcohol sales.
I do not know it for a fact, but my guess would be the county option tax will have to get added to our sales tax lookup because we will be using that same GIS mapping to determine that. Programming for that still in process.
Okay, we have another question. If we do online sales, do we only charge the state tax or does it go off where the item is shipped to? It would follow where the customer takes possession of the item. So if you were shipping it from Sioux Falls to Rapid City, it would be subject to state tax of 4.2 and then Rapid City tax of 2. Just so it's where the customer takes possession of it. And if that is shipped out of state, then it would not be subject to South Dakota tax.
Okay, our next topic here is use tax. Use tax applies to all products and services used or consumed in South Dakota if South Dakota sales tax has not been paid. It is charged out at the same rate as the sales tax rate plus applicable municipal tax. You report and pay on the return for the month in which you are invoiced, or when you receive the product or service, or when you remove an item from tax unpaid inventory for use. Calculate on the purchase price of the product or service, including any freight and handling charges. And if the product purchased is exempt from sales tax, it is also exempt from use tax. We only owe sales tax or use tax on the TPP, not both.
Okay,
And this applies.
Go ahead. We have a couple more questions. So Jason, I'm going to answer yours first, then I'll get back to Susan's. So you stated we do not report it if it goes out of state. No, if you are in South Dakota selling, you do report all of your gross, whatever you did for that month on line 1. then anything that is shipped out of state or sold out of state would be deducted in the non-taxable line. Okay, also just talking with the digital project that he's selling to New Zealand, that would not be subject to South Dakota tax. So I don't know what you would charge for New Zealand, but it would not be South Dakota tax because they are taking possession in New Zealand. And then Susan said Mount Rushmore is outside of the municipal tax area, but I'm guessing county taxes would apply. Does that sound right? Are you talking like the gift shop and everything that's at Mount Rushmore? So that would be subject to state tax and tourism tax. And if there's a county tax, then yes, the county tax would apply.
Yeah, if Pennington would enact the county option tax, then that would apply at Mount Rushmore. Yeah.
And then she says, I process repair maintenance invoices. Repair and maintenance. So yep, that's subject to sales tax. So services to improve, maintain Mount Rushmore. If your customers aren't exempt entities, then they would be subject to the state, the city, or the state tax, the county tax if it's implemented. See, those are per county basis, not going to be across the board. But is that state property? Is that, or Mount Rushmore? Or federal? I don't know. So okay. Susan, is your customer the federal government or the state government? Oh, okay. So your customer is not the federal government. So yeah, it would be subject to the state and the county if it's implemented.
Okay. All right. So one last note here on the use tax slide. Use tax does apply to all products and services used, stored, or consumed in South Dakota if South Dakota sales tax has not been paid. Exceptions to both is if the item was picked up at a rural location and taken into a city that imposes a tax. Paid sales tax to the supplier, and they would owe use tax on the city portion only. So what comes to mind here would be an example of like maybe materials. If you brought materials, you purchased materials in the county, say we have a Menards in Yankton County, not in the city, and someone goes to Menards and picks up $5,000 worth of supplies at that site, they would pay 4.2% state tax because they're outside the city limits. If they would then bring those materials into Yankton and use them on a project inside city limits, they would need to report city use tax for Yankton for $5,000. So it would be 2% city tax on the $5,000 worth of materials in the period that they used those materials. Okay, so examples of items often assessed use tax can include computers, donations, farm equipment, equipment leases, demonstration and sample items, office supplies, manufacturing equipment, tools, snow removal, services, promotional gifts, software and support, meal furnishes for employees, and equipment brought into South Dakota from another state. One example on services that I generally will give to people when I am opening up a license would be cleaning services. So if you hire someone to come in and clean your office or your business, when they invoice you, you want to make sure that they're charging you sales tax on that invoice. If they did not charge you sales tax, you would report the cost of that service on your return in that period and pay use tax on that service. So it'd be state and city tax due if you're inside city limits. Situations in which South Dakota sales tax may not have been paid and use tax is due can include items purchased from an out-of-state vendor or mail order companies, items taken from inventory for your business or personal use, items purchased over the internet, purchase made in another state and brought into South Dakota, and product was not taxed or was taxed at a lower rate than in South Dakota, rental receipts on equipment brought in from another state, purchase of promotional items, or supplies used or consumed in providing a service providers, what that's referring to. So if you purchase a product or service out of state, if you have the item delivered to your address in South Dakota and you have not paid South Dakota sales and municipal tax, you would owe use tax and any municipal tax to South Dakota. If you pick up the product in another state and the retailer is legally required to collect that state sales tax, you will not owe South Dakota sales and municipal tax if that state sales tax is the same or more than South Dakota tax. If their state's tax is less than South Dakota state municipal tax, you may pay the difference. You must pay the difference to South Dakota. Credit is allowed for sales and use tax legally due and paid to another state against the sales and use tax due in South Dakota if the other state provides for like credit. So one example would be you live in Pierre and you purchase a computer for $600 plus $10 shipping and handling through a company that did not charge sales tax. You must pay the $610 times 6.2% state and municipal tax. So that would be a total of it says $37.82. I'm depending on the math there in my note here. So, and then another example would be you purchase and pick up a computer in Minnesota to use in your Sioux Falls store. You pay the Minnesota store $531. That's $500 plus, or I'm sorry, $532.50 to Minnesota, and that's $500 for the product and 6.5% Minnesota sales tax. Because South Dakota sales and municipal tax is 6.2, you would not owe any additional tax. And then I've got an additional example. You purchase and pick up a computer in Wyoming to use in your Sioux Falls store. You pay the Wyoming store $520, which is $500 plus the 4% sales tax. And because South Dakota has a municipal tax of an additional 2%, you would owe that additional 2% for Sioux Falls municipal tax. If you're in an industry where you keep inventory on hand, there can become a use tax instance if you take material from inventory where tax has not been paid on that. Items taken from inventory are subject to state and applicable municipal use tax unless they are taken from inventory as a display or a demonstration item on a temporary basis and then returned to inventory to be sold. If a store withdraws items from inventory for personal use or other commercial use, use tax would be due when the item is taken from inventory. If the item is sold at a later date, sales tax will be due on the item with no deduction for the use tax paid. I have a couple of examples here. A grocery store gives food samples to customers. The grocery store would owe use tax on their cost of the food given away. A second example would be if a store uses a computer as a display item, the store does not pay use tax. The store would owe sales tax on the display computer when it is sold. And then if a store purchases a computer desks exempt from tax to resell to customers and uses one of those desks in their office for 3 months, the store owes use tax on the cost of the desk. When the desk is sold at the later date, sales tax is due on the selling price. Credit for sales or use tax legally due and paid in another state is allowed. Equipment less than 7 years old, purchased for use in another state to be brought into South Dakota is subject to state use tax plus applicable municipal tax on the fair market value of the equipment. The equipment age is determined by the equipment's manufacture date, if it's documented, or the date of the purchase by the person bringing the equipment into South Dakota. Sales and municipal tax apply where the customer receives the product or service. So products picked up at the seller's location, sales and municipal tax at the seller's location is due. Products delivered, the sales tax and municipal tax would be due where the item is delivered. If it's delivered, but the delivery address is unknown, sales and municipal tax would be based on the customer's address. And if it's product transferred electronically, there's no delivery or customer address on file, the sales and municipal tax would be based on the seller's address. Sales and municipal tax apply where the customer receives the product or service. In these situations, for personal care services, sales and municipal tax would be at the location the service is performed. Services performed on products, the sales and municipal tax would be at the location the product is delivered to the customer. Lease or rental of products, the sales and municipal tax would be applied where the customer receives the product. And if the product is moved to another location during the time of that contract, the sales tax on future payments applies to that new location. Delivery to a location outside of South Dakota, there's no South Dakota sales or municipal tax due. And here's an example. A customer purchase. Okay.
Yes, Jennifer asked, is there any services that are not taxable? Yes, they're exempt services and they're exempt products, and she is getting to that too. We have a couple slides on that too.
Okay, thank you.
Okay, so an example on the invoice, a customer purchases computer software. The seller travels to the customer's location in Rapid City to install the software. They charge out the software, the installation fee, lodging and meals, and the state and city tax is applied. So we have a total of $310 in tax, which makes our total invoice $5,310. Reimbursable expenses are taxed unless you are an attorney or an accountant, and there is no markup. The attorneys and accountants, those industries are handled a little bit differently. So there was a question earlier on lodging and meals and mileage. They would be taxed unless you are an attorney or an accountant, and they are not marked up.
Question. We have another question. For equipment repair services installed and service provided outside of city limits, and we would charge state tax, would we owe the additional 2% city tax if that piece of equipment is then brought into the city limits after repair? Yes, you would. If you're using that piece of equipment in the city limits and state tax was only paid on that piece of equipment, you would owe the additional 2%.
Okay. Generally, this is our halfway point for the seminar. And we do like to take a break here at this point just to give everyone an opportunity to use the restroom, refill a water, whatever the case might be. So if we would take maybe 5 minutes, would that sound fair to everyone if we just take a quick break for 5 minutes?
Sounds good.
Okay, we'll restart again at 3:13.
Let's just make it 3:15.
3:15. We'll do it.
Okay, we have a question. And Lori, I'm going to ask that you send that question to me with some details, because when it comes to advertising, there's certain things that are considered advertising. So if you would just send that question to me in as much detail as you can, and then I'll get that answered for you.
All right, I think we are at 3:15, so we'll go ahead and resume. We are now going to move on to exemptions. And there are 3 reasons a sale may be exempt from sales or use tax. If the product or service is specifically exempt, if the purchaser is exempt, or if the product or service is used for an exempt purpose. If you do not receive a properly completed exemption certificate, you should collect sales tax. So this is a copy of the exemption certificate that we use. The instructions are on the back side of this. This is available in our streamlined documents. The required information on the exemption certificate is the purchaser's name and address, the ID number, if required by the state where the sale is sourced, the type of business, the reason for the exemption, and a signature. If it's a paper copy, if it's an electronic copy, then the signature is not required. You can get the exemption certificate on our website or by calling us at our 800 number, and that is available. It's 1-800-829-9188. Businesses with permit numbers containing use tax or excise tax, contractor's excise tax, cannot buy products or services for resale. So if you're only operating with a use tax license or you have the contractor's excise tax license only, you are not allowed to use those exemption certificates. The certificates are used to claim exemptions for products and services. You want to keep the exemption certificate in your records to document the exempt transactions for the last 3 years. Exemption certificates do not expire unless the information on the certificate changes, but we always recommend updating the exemption certificates annually. And if the purchasers are from a state that does not issue sales tax permits, they may use their EIN number, a driver's license number, or a state issued ID number on the exemption certificate. So an example here could be if you get an exemption certificate in 2010 and do not get a new one and still sell to the customer in 2014, you need to keep that certificate from 2010 as documentation. If you keep it in your records for 3 years and then toss it, you no longer have the documentation to support that exempt transaction in 2014. You want to include receipts from exempt sales on line 1 of the tax return in your gross receipts and deduct those sales on line 3 in the non-taxable sales line. Some examples of exempt products and services are listed here: agricultural products, educational services, food stamps or WIC items, forestry services, healthcare services, livestock, motor fuel, motor vehicles, prescription drugs, social services, travel agent services, trucking services, and water services, water for domestic use. The livestock here does not include pets. Some of the exempt entities in South Dakota include government agencies, including South Dakota Public Schools, municipal or volunteer fire and ambulance departments, tribal governments, nonprofit hospitals, religious education institutions, nonprofit accredited private educational institutions, non-profitable charitable relief agencies recognized by the federal government and the South Dakota Department of Revenue, and they must be registered with the South Dakota Department of Revenue. They are a relief agency. Churches are not exempt from sales tax. That is a common misconception. Relief agencies could be agencies like in Yankton, I would say the United Way. We've got the Banquet, which is at one of the churches here. It's an organization that puts on a weekly meal. Meals on Wheels, a lot of times, the senior meal programs are considered relief agencies. There is a separate application that an entity has to file with our department, and we go through a review process, and we would either send out an approval and send out the license, or we would send a denial. Basically, the relief agencies want to be able to prove that they are relieving a tax burden to the poor and underprivileged in South Dakota. Employees or representatives of an exempt entity must pay sales or municipal tax if they use a personal check or a personal credit card. Lodging paid directly from an exempt entity is exempt from sales and municipal tax. Government entities must provide an exemption certificate, or the vendor must keep documentation to show the purchase was paid from government funds. Documentation may include a purchase order or a check stub. And when a purchase is made with a government credit card, an imprint or a copy of the credit card must be kept as documentation.
We have a question. If
Okay.
a customer is from out of state and they have a resale certificate from their state and do not have a sales tax license in South Dakota, does sales tax have to be collected? And then a little extension there. The customer is responsible shipping of their product to their customer. So if you are selling to, if somebody is selling to them an item for resale and they provided you with a streamlined resale certificate, it would not be subject to tax. That kind of, as long as it's filled out correctly, that covers the person selling the product.
Okay. Exempt transactions include sales for resale, drop shipments out of state, agricultural, certain repair parts, and direct pay permits. We did talk a little bit about the relief agencies. Other examples could be coins, currency, bullion, ag repair, and health services. Sales for resale include, businesses can purchase items exempt from tax if they intend to sell, rent, and lease those items in the normal course of their business. Items can be purchased for resale if they become a part of a final product that you're selling. Service providers must pay sales tax on all products and services they purchase unless there is a specific exemption. Okay, on manufacturers, raw materials that become part of the item sold can be purchased tax exempt as items for resale. Containers can be purchased without sales or use tax. Some examples of containers could be labels, packing cases, wrapping paper, tape, bottles, and bags. Manufacturers, some non-taxable items for them would be component parts, labels, welding wire or rods, pallets for manufacturing, containers, raw materials, component services, prescription safety glasses. Taxable items for manufacturers would be operating expenses, sandpaper, oxygen, electricity, prototypes, molds, consumable services, repair, and safety glasses.
I have a question.
Okay.
Would shrink wrap for pallets be included in the containers? Yeah, it's packaging material. So yes, it would be included as non-taxable.
Services purchased as part of the manufacturing process may be purchased for resale, like welding and painting. Two criteria for purchasing services for resale would be the purchaser of the service does not use the service in any manner, and the service is delivered or resold with no alteration. It must become a component part of the final product sold. So one example could be a manufacturer hires a painting service to paint lawnmower parts. The manufacturer does not use the service. The service is resold to the customer without alteration. The manufacturer may purchase the painting service for resale and must provide the painting service with an exemption certificate. A second example would be a lawnmower manufacturer contracts with an engineer to design a new mower. The manufacturer cannot purchase the engineering service for resale because the design does not become a part of the mower. The manufacturer uses the design to create the product, so the engineer services are subject to sales tax. Service providers can purchase another service for resale if the service is delivered to a specific customer in conjunction with the services contracted to be provided to that customer. The three criteria for service providers to purchase services for resale include that it's purchased for or on behalf of a current customer, the purchaser of the service does not use the service in any manner, and the service is delivered or resold with no alteration or change. And some examples here would be a computer software company hires a programmer to customize a program for a specific client. The sale meets the three criteria and the service can be purchased for resale. A second example would be a computer software company hires a programmer to develop a new program. The software company then copies and markets the program to the public. This service is taxable because the programmer's services are being used by the software company.
We have a question. One more packaging question. Would dunnage, wood used to set pallets on separate when shipping is exempt from sales or use tax? The question I have for you, Stephanie, is that wood, does that go with the product? Because if it goes with the product, then it would be exempt from sales or use tax as a packaging material. If it's just something that's you set on and it stays at the manufacturer, then it would not be exempt from sales or use tax. But if
it's used with when we ship it, and stuff like that. So it's on the trucks.
So it's with the product.
Yes.
Okay, then it would be exempt.
All right. Thank you.
You're welcome.
All right, and we'll go on to some additional information on containers. Containers may be purchased exempt from sales tax if the retailer furnishes the container free of charge and the container holds the product sold to the customer. Containers the retailer reuses cannot be purchased for resale. So some examples include boxes, bags, food wrappers, and cups. And here's where we'll expand a little bit on the agricultural equipment. When the equipment is used primarily for agricultural purposes, it is subject equipment, we're referring to equipment, it is subject to state tax. There's no municipal tax due. So farm machinery, attachment units, and irrigation equipment, we used to refer to it as an ag excise tax, and that would be subject to tax at 4.2%. The items that would be exempt from sales and use tax would be sale of parts or repairs on farm machinery or attachments units, including irrigation equipment. So for the parts, the replacement parts and the repairs, those would be exempt. Maintenance items and maintenance services when used on farm machinery or irrigation equipment. Seed sold in quantities of 25 pounds or more. Commercial fertilizers sold in quantities of 500 pounds or more. Soil amendments as defined by SDCL 38-19A-1 in quantities of 500 pounds or more. Pesticides, motor fuel, and electricity used to power irrigation pumps. And then we'll go on to tribal collection agreements. There are 5 tribal governments with sales, use, tourism, and contractors excise tax agreements with our Department of Revenue. It's Standing Rock, Rosebud, Cheyenne River, Oglala, and Crow Creek. There are 2 tribal governments with limited tax collection agreements for use and contractors excise tax, and that would be the Yankton Sioux Tribe and Sisseton Wahpeton. The tribes with no collection agreements in South Dakota would be Flandreau and Lower Brule. The Tribal Revenue Department has jurisdiction over licenses owned and operated by enrolled members of their own tribe. The State Department of Revenue handles all other licenses. Tribes may impose tribal tax in addition to sales tax in the form of a TECRO or TARO tax. The tribes with the limited tax agreements, the contractor's excise and use tax, is the Yankton Sioux and the Sisseton Wahpeton. And then no contractor's excise, sales, or use tax agreements are in place with Flandreau and Lower Brule. Sales of products and services delivered in Indian country without a sales tax collection agreement are subject to state sales tax. Sales by an enrolled tribal member on non-agreement Indian country controlled by that member's tribe are not subject to sales tax, state sales tax. Enrolled tribal member retailers may be required to collect the state use tax on sales made to non-members of the tribe and send these funds to the state. Sales off Indian country are taxable. They apply the state sales and applicable municipal tax would apply. Reporting special jurisdiction tax on your return. All sales and use tax is reported on the sales tax return. You include your sales in line 1 in your gross receipts, and then deduct those sales to tribal governments or non-taxable sales for any tribe on line 3 under non-taxable sales. Any sales that are made within the special jurisdictions in Indian country where the tribe has a collection agreement are reported on line 4 under the special, or they're deducted on line 4 under the special jurisdiction sales. Then under the city and special jurisdiction calculation detail, you would report the taxable sales made within that special jurisdiction using the code assigned to that jurisdiction. The code will include the name of the tribe that controls the Indian country where the sale was made. And you report the taxable sales subject to city tax under the appropriate city name and code. And again, those codes are also included in that municipal tax guide that we have available. This is an example of one of those returns. So there was gross sales in the amount of $6,500, no use tax, non-taxable sales of $500 for in a product that was sold to the Yankton Sioux tribe, or I'm sorry, the Rosebud Sioux tribe. And then there was $1,000 in sales to Mission, South Dakota, which is on the Rosebud special jurisdiction. So that's deducted out. Your total comes to $5,000. On line 6, you would report the city municipal tax for Mission using that code on that $1,000. The Rosebud Sioux tribe sales tax using their code, the 412-4, and that assesses the 4.2 tribal tax, and then the pure municipal tax on the $5,000 for the sale delivered to Pierre, South Dakota. Any questions on that breakdown? Okay, we will move on then to the 911 emergency surcharge. 911 emergency surcharge is a 2% tax on per service user line, and the providers collect and remit that tax. 911 prepaid wireless emergency surcharge is 2% of the gross retail sale of prepaid wireless services. Retailers and providers that sell the prepaid wireless service, prepaid wireless airtime cards, and the prepaid wireless plans and minutes. Those entities, retailers and providers, must register with the Department of Revenue. The surcharge is reported and remitted to the Department of Revenue electronically using ePath, and the providers and sellers may keep an administrative fee of 2% or $25, whichever is greater, not to exceed the surcharge collected each month. Returns and payments must be filed and paid timely by electronic means through ePath. South Dakota Codified Law 3545 and Senate Bill 174 are two tools that you could receive more information on these two surcharges. And we do also have a 911 emergency surcharge tax fact. The 911 emergency surcharge became effective on July 1st of 2013. And returns and payments must be filed and paid timely by electronic means to receive the administrative fee.